Hello and welcome to the program. I'm Chimeze Obi Iwagu. First, the markets. And here on the African continent, we saw more of greens at intraday amongst the markets we track. The JSE index in South Africa was the highest gainer, up 1.21%. The NGX index was marginally up by 1 basis point. The market in Egypt was down 1.69%, while the Kenyan market closed in the green on Monday. In the Middle East, markets were mixed at intraday. In the UAE, the Abu Dhabi market was up 0.21%, while the Dubai financial market was down 0.43%. Elsewhere, the Tadawul in Saudi Arabia was down 0.05%, and in Qatar, the market traded in the green, up almost 0.66%. And in Europe, stocks advanced this morning as global investors monitored the spread of the Delta COVID-19 variant and awaited key economic data out of the U.S. There are other stories catching the eye of investors this intraday. Let's bring in Ashutosh to weigh in on those. Hello, Ashutosh. Good afternoon. Good to see you. Well, Facebook has entered the trillion-dollar valuation club after a U.S. court tossed antitrust suits against it. How big a setback is this to U.S. efforts to rein in big tech?
Well, it is definitely a big setback as far as the state's efforts are concerned, because their case was just thrown out. Not so big as far as the FTC's case is concerned, the Federal Trade Commission's case is concerned, because it does have the option of refiling the case. But the whole verdict does offer a reality check to the government, to regulators, and to lawmakers who are looking to actually rein in the power of the big big technology companies, because the verdict does show that if they indeed want to take any action against these big tech firms, then that action must be based on facts. It must be based on the law of land, and it should not be driven by just political motives and political ideologies, because then that will not stand a chance in courts, and that's what this verdict shows. However, on the flip side, it could actually push the regulators to come back even harder at these big technology firms and more have greater resolve so to actually act against them and to rein in their power. And we are already seeing that play out in the case of Google, because the Department of Justice has actually stepped up its probe into the digital ad business of Google.
And in another development, Deutsche Börse, the operator of DAX, is buying a majority stake in Swiss crypto broker and asset manager Crypto Finance AG. What is Deutsche Börse hoping to achieve with this acquisition?
Well, it does show that Deutsche Börse is going big on digital assets, which it says are going to play a significant role going forward in the financial sector. It is basically buying into the idea of digital assets. It has been expanding its crypto offerings in recent months. Just last month, it bought actually a fintech that creates platform to deal with the NFTs, the non-fungible tokens. That investment was, of course, in partnership with Commerzbank. So it clearly shows that Deutsche Börse is actually looking to cash in on the popularity of digital assets such as cryptocurrencies and NFTs. And they have been actually gaining in popularity because of growing interest not only from retail investors but also from institutional investors. And more financial companies are actually now looking to boost their capabilities to cater to their clients who want to deal in digital assets and cryptocurrencies.
And Germany has just come out with its inflation figure for June. What does it say?
Well, the inflation data came in largely in expectation, 2.3% growth from last year. That's above the target that ECB has, which is around 2% and below 2%, just below 2% rather. So it is very much in line with expectation. That is what the analysts were expecting in the run-up to the data. And this time too, the inflation data has been propped up by high energy prices, there's been a major change there. 9.4% is the change in energy prices component of the index, and that is the main driver of inflation as far as June is concerned. Again, that only strengthens the argument by the ECB and other major central bankers who've been saying that the price rise is fairly transitory in nature and they've been driven only because of temporary reasons. In this case, energy prices, because we all know energy prices at this point last year were fairly low. They were just rising from their record lows in April and May, and that's the reason why we are seeing that huge difference.
All right, thank you very much, Ashutosh, for your time this afternoon. Enjoy the rest of the day. And in the UK, house price inflation has hit its highest level since 2004 in the last scramble to take advantage of the full stamp duty holiday. Let's hear more from Juliana in London. Good afternoon, Juliana. Well, quite a number of data to chew today, but we'll see the surge in UK house prices making it harder and harder for first-time buyers to find the deposits they need to get onto the housing ladder.
Absolutely. Good afternoon, Chimaze. We've had the Nationwide Building Society release their annual report on house prices, and it shows that there's been an increase of 13.4% year on year. The previous year, the increase was about 10.9%. So we are seeing that since the sector being one of the first to open in the UK, it is becoming on fire. That was the statement by Andy Haldane, the outgoing chief economist at the Bank of England. And I think he was probably the first senior figure in the UK to start looking at some of the inequalities the rise in house prices will have between those that are better off and have managed to put some money aside during the pandemic and first-time buyers. I think Boris Johnson was pretty clear during the spring budget that he did want to turn generation rent into generation buy. If you look at some of the house prices, it's going to be virtually impossible. So the average price of a UK home currently stands just shy of £246,000. If you want a house in London, you'll probably have to pay double that if you want a decent house anyway. And you've got to put down a minimum of a 5% deposit for first-time buyers. For some individuals, that is going to be more than 50% of what you would earn in a year. So it is difficult. Of course, there are winners and losers. Some of the winners, and we've seen that on the FTSE today, are the house builders, the landlords. But it is asking a serious question, really, about, when this bubble is going to burst and how first-time buyers will be able to get on the property ladder.
In the meantime, Britain's car industry has warned that 90,000 jobs are at risk in the UK unless the country builds more battery factories to support the transition to electric vehicles. Will it be right to say UK is on track to fall behind major rivals in the race to build gigafactories?
Well, if you ask the Society of Motor and Manufacturing, who have had an annual summit today, and they've released a report that's starting to look into the electrification of vehicles in the UK, they would say there is a serious problem. And it's not just moaning. The British government have put a target that by 2030, new petrol vehicles and diesel vehicles will be outlawed. So you won't be able to buy a new petrol or diesel vehicle in the UK within 9 years' time, but they just don't think enough effort is being put in. I think one of their statements suggested that the British government are long on talk but short on action. They have compared Britain's standpoint to the positions that America and Germany are in. So, for example, they're looking at these gigawatt factories, and you need these gigawatt factories to power the lithium battery that goes into electric vehicles. Now, by 2030, the UK are going to have 12 gigawatt hours worth of lithium batteries. That compares to Germany with 164 and America with 91. Now, what the Society of Motor Manufacturing are asking is that the British government push that target up to 60, and that will enable the manufacturers to produce 1 million electric vehicles per year. And that's the target that they say they need if they are going to encourage people to buy electric vehicles. Also, as well, well. There is some subsidy. Now, if you want to buy an electric vehicle here in the UK, there is a grant that you receive by the government. I believe it's £2,500. Again, the society think that's too small. I believe in Germany, they're given €7,000. And in America, you get $9,000. So there is still a long way to go. The Daily Telegraph were reporting yesterday that Nissan, next to their pretty popular plant in Sunderland, they will be building Britain's first gigawatt factory, and that will enable them to make at least 300,000 electric vehicles every year. But there's still a long way to go, and this isn't just moaning. This is part of the government's target, and if they are going to achieve it, they're going to have to up their game.
I see. Well, with all these data out there, brings up to speed with intraday market numbers.
Yeah, it's pretty much a tale of two halves. I heard you speaking with Ashertoft in Frankfurt there about what's going on with the Delta variant. We had news earlier this morning that Hong Kong will be banning UK flights from Thursday. We're also seeing a similar kind of blockage of British tourists among popular destinations across Europe. That sent lots of tourist-related stock flying. At intraday, TUI, their share price is down about 4.5%. BA owner IAG, their shares are down, as well as all the budget airlines, Ryanair, EasyJet, Wizz Air, they're all down. On the flip side, we've had positive data, well, for the house builders anyway, from Nationwide Building Society. So we are starting to see Taylor Wimpey, Persimmon, holding on to those gains that they got at early trading. They're all trading up by about 1.8 to 1.9%. And the FTSE is in positive territory at intraday. The all share is up 0.18%. The FTSE 100 is up by 0.13%. And the FTSE 250, the domestic market, that's also up by 0.13%. In the currencies market, the British pound is currently down against the US dollar by 0.23%, down against the euro by 0.03%, and also down against the Japanese yen at intraday by 0.26%. Chime.
All right, thanks, Juliana. Tomorrow is another day. Enjoy the rest of the day. On commodities market update, we are looking at rubber. The global production of natural rubber is estimated at 13.7 million tons. Africa produces approximately 1 million tons, making it a fringe player, with Ivory Coast as Africa's largest producer of rubber with 997,000 tons. Why is this so? Let's talk to Aisat Dahoud, one of the research analysts with Financial Derivatives Company. Aisat, good afternoon. Good to see you.
Good afternoon. Thank you for having me.
So why are African countries fringe players in the natural rubber cultivation and production process in spite of its favorable weather conditions and vast arable land?
Okay, I would say most African countries lost focus in the process of discovering new sources of revenue for their countries. So they lacked the strategic intent to maintain their old sources of revenue. They allowed it to slip off their hands. Because if we look at the top producing countries currently, that's Thailand, Indonesia, China, and the likes. We have just Ivory Coast there that is among the top producing countries representing Africa. These countries, Thailand, Indonesia, and the likes, they were not producing as much as we used to back in the day. So in 1960, Indonesia was barely producing less than 1 million tons. Now Indonesia is doing over 4 million tons. So if we look at it, I think that was the major issue, loss of focus on the major source of income or maintaining other sources of income.
So natural rubber is a major raw material for the production of automobile parts like tires and tubes. It is also used mainly in the manufacture of gloves, shoes, and a lot more. That was in 2020. Now, there was a 7% decline in aggregate demand to 12.7 million tons. How is this possible when the demand for hand gloves spiked during the pandemic? Can you explain why this contradiction between the demand and supply dynamics of rubber in 2020?
Okay, yes, medical gloves is a major tool in the PPE for healthcare professionals. And the demand for medical gloves surged during the pandemic. We expected to have one would have expected it to have a positive impact on the aggregate demand. However, it didn't. Why? Because the pandemic restricted movements. There was lockdown, there was no interstate travels, and the closure of the airport, and restricted movements, the closure of automobiles and tire producing factories outweighed The losses from those from the closure of automobile and tire producing factories outweighed the increased demand from the use of flood. That was the major reason for that being effect.
Okay, so Nigeria, used to be a major producer of rubber, especially in the Niger Delta region. It has since the last 50 years lost its share to the likes of Indonesia, Malaysia, and so on. So what went wrong, and how can Nigeria correct this as part of the diversification strategy away from oil and its backward integration process?
Like I said earlier, most of the African countries struggled to maintain their current source of income while looking for other sources of revenue for the country. Nigeria is a major example of that. During the oil boom season, we had, more focus on the revenues we're generating from oil, and with the, rise in oil prices then in the 1960s and 1970s, we began to leave the other sources of income like because most of our cash crop, our major export revenues, our major foreign exchange revenues then were our cash crops, cocoa, rubber, and much more. So all these major revenues, all these cash crops were left behind, and focus was majorly on oil. That was what went wrong for Nigeria. And what can be done now is to focus more on our mechanism of, because we are blessed with a lot of business. We are blessed with rainfall. That's what we need for producing rubber to be able to harvest in large quantity. Currently, Nigeria is producing 354,000 tons of rubber per annum. We can do much better if we focus and we give it the attention it needs. And we also, in terms of output, come to the manufacturing sector, that's plastic and rubber segment under the manufacturing sector. It grew by 1.6%. That's in the first quarter of this year, and it impacted, our GDP for the country. In terms of trade, the amount of rubber we export is lower compared to the amount of rubber items we import. So another aspect of improving what we can do is to add value to this rubber. Not just exporting it rubber. Let's start adding value to it. We have companies like Olam and like that have rubber plantations, and they've gone to the effect of processing this rubber to produce other finished goods so that we can export them and improve our exports too. So those kind of things we can do to be back on the track of where you said.
I thank you very much for your time. I enjoy the rest of the day. And Egypt, for the first time, has set a minimum wage for private sector workers, moving towards bringing those employees under the protection of regulations long forwarded to their public sector counterparts. The new wage was set at 2,400 Egyptian pounds. That's about $135 per month. The new minimum wage is on par with what was ordered by President Abdel Fattah el-Sisi in March for the public sector. The push for private sector minimum wage had largely stalled with the onset of the coronavirus pandemic and the impact it had on the economy. At the same time, workers have long clamored for higher wages as they complain about the cost of living. The government says that businesses affected by the new guidelines, which go into effect January 1, 2022, will have until October to submit complaints. And the International Monetary Fund says COVID-19 infections in Africa will likely exceed previous peaks within days, underscoring an urgent need to accelerate vaccine supplies and financing to the region. According to the IMF Managing Director, Kristalina Georgieva, Sub-Saharan Africa, already with the lowest vaccination rates in the world at less than 1% of the population, again risks having its healthcare systems over without immediate action. It maintains that without significant upfront international assistance and without an effective region-wide vaccination effort, the new-term future of Sub-Saharan Africa would warn of repeated waves of infection, which will exact an ever-increasing toll on the lives and livelihood of the region's most vulnerable, while also paralyzing investment, productivity, and growth. The fund has urged wealthy nations to more quickly share their vaccine stockpiles with Africa through the COVAX initiative, saying that the goal should be to deliver 250 million doses to the region by September. And the International Monetary Fund's Executive Board has decided that Sudan has reached the decision point for the highly indebted Poor Countries Initiative, meaning the country can begin receiving relief for its more than $550 billion debt. A quarter of a century after IMF and World Bank launched their HIPC debt relief program, Sudan is the penultimate economy to come through the process and by far the largest case in absolute terms. As part of the decision point, the IMF is expected to announce an extended credit facility for Sudan, one of Africa's largest and most populous countries, which will provide new financing in the form of grants and cheap loans. Analysts say the decision has come at a historically fast pace, a product of international goodwill towards the country's civilian leaders and rapid, painful economic reforms. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwagu.